friends, this is Martin from Secrets, the channel for learning about trading and investing, and welcome to another brand new video content on the crypto investing. This is going to be very brief and then touch upon how to get into action, why to get into action primarily. So let's look into what we have in store. So there are n number of coins. If you go to this website, coin market cap, you have around 2,000 and 3,000 versions of different coins and tokens available for you to trade. So the primary thing that you have to do to protect your capital when you are dealing with crypto is to trade only on the top 5. Basically, right now these are in the top 10 or 20 of that. If you go to this website, you can see which is on the top 10 every day. So these are the coins that you need to trade with primarily. Bitcoin, indicated by BTC, the Ethereum, the USD, Tether, the Cardano, Solana, and Polygon Matic. The symbols for that is indicated in the brackets here. So these are coins. So Bitcoin, of course, the coin that is the largest market capital, and then Ethereum is the next one, the largest, and the stable coin USD, Tether is also useful, and Cardano, Solana, and Polygon Matic are trying to be competing with the Ethereum with similar platforms with different proof of stake kind of concepts, and making it faster execution and then environment friendly plus mining, etc. So these are all the areas where these last 3 coins are trying to capture the market, right? So do not go and do any of these other coins. So this list may keep changing over a period of several years, but as of now, currently, if you look, these are the coins that may not go to zero. Basically, you would have, even if there is a big crash that is happening, even if the volatility is very huge, you would most likely not lose your capital. It may still be there because a lot of work has been put in there. There is a lot of market capitalization, a lot of people have put in money in this, and the concepts behind this, right? The narrative behind investing in these coins and the technology behind this, the benefits of using that, it makes sense, much more sense than any of the other Doge coins and n number of other coins and tokens that's available, right? So that is the key thing that you keep in focus. Next, you need to reiterate yourself to make yourself convinced that why do you need to invest. We've already discussed in the previous video. If you're not seeing that, check out the playlist of the cryptocurrency playlist and you can see the other video where we go into details. Just to reiterate some of the points there. So there is a need, there are inherent benefits of having a parallel currency to the fiat currency, right? It costs less, it can get transacted quick, there's no intermediary, and lot of savings, benefits, and technology advancements and enterprise applications. A lot of benefits. So you need to update yourself on the underlying blockchain technology also, and the need for such. Why do you have inflation-based currency printing happening? What's an alternative to that? How do you have the same value of money in different countries? And all of these concepts are very innovative, and at the same time it is everyone knows that it is needed, but how is the only question. This is one of the ways of accomplishing that. And then so you need to keep yourself updated with the blockchain technology, which is the underlying behind all of these coins and all of the crypto environment. The underlying concepts of secure transactions and distributed ledgering system, and all this you have to be aware of what decisions are further happening in this area. That helps, right? That helps you to be more convinced in investing in this, right? And also you have to understand that there is a lot of volatility in the cryptocurrency, right? Every kind of form of asset would have its own volatility during the initial phase of early adoption by the users, right? So this is crypto's very early phase, you can say, right? We are far away from the maturity phase. So at this phase of and this is technology disruption. This is disrupting the entire fiat currency world, the currency systems, the way payments are done. So everything is getting disrupted, and it's definitely an early adoption stage, the volatility would be there. At the same time, you have to understand that there is a first mover advantage. Every time anything you risk, you will have a benefit for that. Right? So with the volatility, you also get the first mover advantage. You may not get this kind of profits of 50-60% in few months of investing in crypto. It may not happen in the future, right? When the coins are exhausted or when things change. So you benefit from that risk or some that volatility also, right? And also, some of us may be worried about what if regulations come there. Regulations would be there, but it cannot be banned in any of the countries because countries have started adopting it. Large business houses have started adopting it. You have Goldman Sachs, JP Morgan, and biggest financial institutions in this world have started turn towards accepting the cryptocurrency in small way. Even you have the crypto ETF that is listed in the US stock exchange, right? So institutions are adopted that big investors, traditional stock market investors like Ray Dalio and Paul Thiel and big investors have allocated their assets, their capital towards crypto as an asset also. Big investors. So it is not that you are some gambler who is getting into it. These business houses and investors and institutions have studied a lot and they have an underlying reason towards investing in this, right? Recently, so and this India is the country where we have 10 core crypto owners as of now, right? And the entire crypto market is around 82,000 billion market capital just on the Bitcoin alone. So it's a huge market, which huge number of crypto users getting added in our country and across, and this is adopted by big business houses, institutions, and all. So there is an underlying technology which makes sense, and there is a need for such that. So do not think that this is going to be a replacement of the fiat currency. That's not going to happen as long as we have governments and central banks. That's not going to happen that easy. But eventually, it will be an alternate way of payment, an alternate mechanism of transactions, doing business. And in addition to that, you know that the underlying technology also facilitates enterprise applications and small business government applications and all of this wherever there is trust deficiency, right? So this belief in all of these factors will make us convince ourselves, don't just blindly say, this is gambling and you got to lose your lab money wiped out. So that is for those who do not understand which are the places and you have to invest in the crypto, right? Which are the assets that you have to focus on? Why do you need to do that? What is underlying reason for such so many investors, houses, and business owners and slowly turning towards that? What is the underlying technology behind that? Then you get the business first mover advantage when you are participating in the early adoption phase. That's how you have to look at it, right? So let's quickly look at the technical chart for the major two Bitcoins, the Bitcoin itself and the other cryptocurrency, which is Ethereum. So we'll just look back. So one thing you have to keep in mind is that charts have very less information. So this is from 2014 hardly data only. So it may not be the analysis of multi-time frame and detailed analysis may not make sense because it's in the early stage, but still price action still works in the charts. Let's just quickly go to the charts and see what it shows. So this is how crypto has been moving around, right? You can see that there is a, if you look at the weekly charts, you can see that it was look at what is the price range in the early 2014s around. So you hardly had $600, $500, $300, $34, $100. So it spiked up, and then we had the big breakout move that happened at 28,500 kind of levels, and went ahead and hit the 66,000, and recently, and after that it had a big 20% kind of move, but it took the support of the previous support, and then it again started bouncing back, and now it is coming down. Means it's kind of an M pattern, and if that breaks this neckline of the M pattern of 30,000 level, then we have trouble in place. But right now what is happening is it had taken out the previous resistance at 69,000, and it for the last week it was facing severe resistance at the 69,000 levels, and it seems to be having a longer week now. On the weekly basis, it shows that the presence of the bulls are there. You can see that weekly the momentum is intact, and RSI momentum is bullish itself, and you can see in short term that it is going in a channel cream, right, from the 2021, June, July, that time frame. So it's clearing moving in a, in the channel pattern, right? So it was taken support or bounce at the channel bottom, close to that, and then this 58,008, 750 kind of level seems to be a good support, which is also a previous support zone, right? You can see that this is a support zone, right? So there is a support that is evident here, and that's exactly where we are right now. So if that is taken away and then it moves ahead and crosses this, then we have bullishness. But right now it is kind of sideways. If you put the bands also, you can see that there is some sideways, but you can see that the volatility is expanded on the both sides. So there will be volatility definitely, but the moment it crosses above 60,000, 62,500 and crosses above the moving average, then we can say it's back to bullishness again. But this is kind of a dip that has happened. This may be the time to take the take the plunge with this Bitcoin. So Ethereum also, the cost is coming for right now. It is so Bitcoin is at $59,151, while Ethereum is $4,377, and you can see a similar pattern, daily pattern. If you see, first let us go to the weekly pattern. You can see a clear channel up move, right? It had a breakout at the 1,350 levels, and after 2000 there was a big move where it hit the 4,500, and recently it broke out of that all-time high levels and went to hit 4,850 above levels, and then it faced resistance and expectations, and it has to break out of the 5,000, and that is where the big mega move is going to happen. Similarly, Bitcoin has to go above the 60,000 for the big breakout move that has to happen, right? So these are the 2 points that I would like to highlight. So this is the crypto, marketcap.com, the website where you can learn about everything, right? You just want to learn about Bitcoin or any coins for that matter. You just click on that. You can see all the details, the blockchain, the channel, and you can explore everything, even the source code, community, white paper, everything is there. Right. So let's get back to the charts, and yeah, let's run the slides again and then see. Yeah, so certain things that you have to keep in mind, and that what I call the investment basics of the crypto at this point in time. It may not be the same after a few years, few months, right? It's very disrupting. As we spoke earlier, the things may change. The technology and client technology may have changed. For example, Ethereum is now moving to a proof of stake model. By the end of this year, it's coming out with a new faster proof of stake kind of approach. So that's further disruptions. Like that, things may change every few months or years. So as of now, these are a few of the tips of how to go about investing that. So buy early on the dips. So whenever you have 5% or 10%, right now we have a kind of 10% kind of dip that has happened right now from the previous hot time. That's a time for to get in. Right? Whenever there is a 5 to 10% dip, go in for go long on that, and then just wait, right? So book the profit as per your target. You're targeting for 25%, 10%, 15%, whatever. Sit tight on that, and then book your profit partially or fully, and then re-enter that. So basically, one way to do it is once you have met your target, right, which can be Fibonacci projection or a pivot level of any of this as per the charts. What a percentage of your profit or capital, whatever. Once it is met, and then you can invest this in the USDT Tether, which is a stable coin which does not fluctuate, and then you get you can deposit that in DeFi lending applications like Vault, where you get a reasonable interest of up to 13%, 12 to 12.5 kind of percentage interest per year. You can get, you can park your money there, and then again when you have another 5 to 10% of dip, re-enter that, and then wait and go for the target, and then right? So that is one way of investing, right? So always keep in mind that invest only that money that you can take. Those is highly volatile. Invest only on those coins that is mentioned. Put only 1 or 2% maximum of your capital that you can afford to lose. Nothing will happen if you lose that also. Only those money has to put in here. Put only money in reputed exchanges like Vault or Xerox or top reputed exchanges only, right? where they do the KYC checks, and then you do not risk your money and go and put in some exchange which does not have any KYC, or so they may vanish. You can lose your entire money even if the coin is valid, right? Because of security issues, hacking. So Vault has got an insurance. Vault is reputed, Singapore based, and it gives you, fixed deposit DeFi lending, benefits and advantages, and it is run by backed by venture capitals reputed across the globe. So go for such exchanges. Look at the background of the exchange that you're trading with, right? And there's only in the coins that is in the top 5 list, and put only 1 to 2% of your capital and make use of parking your money in the fixed deposits DeFi platforms and get the interest, and then buy only on the dips, right? Reinvest it every time, right? Every time you put whatever profits that you don't take it out of the exchange and put it back in your, keep it there, redeploy that, reinvest that, right? And then do the same thing, repeat the same. So a lot of news will be floating around, right? Government policies, this, that, but don't jump the ground and and sell off and then come out just because we heard a news. So that good or bad, whatever it is, news is at this volatile early adoption stage. News is obviously going to happen. It's going to be there. So don't jump the guns. At the same time, you have to be aware of what is happening in this world. For example, I said, Ether is doing, a big technology shift is happening in the case of Ethereum by the end of this year. But a new coin has got successfully implemented, and so you implemented on this green technology. So you have to be aware on what is happening around that. In the right place that you have to be aware is this coin market cap as of now. This website will give you all the information that is required for you to know about any of these coins that we have listed here. So same, you have to be aware, but do not get carried away or jump your guns by hearing a lot of fake news or valid news also. That does not help you as an investor, right? So just to summarize, buy only when there is a 5% or 10% corrections. Sit on it once the target is met. Book your profits, come out, and then deposit it in USDT. Put only that 6 coins your money, 1% to 2% maximum, that will only put. Reinvest that. Put only into Twitter exchanges, right? And stay invested always for the compounding to work, right? And keep learning. You just can't stop learning. Every single day will be happening. So when you're investing in anything, be it property or be it any investment vehicle, you need to be aware of what is happening in that world. So this is a new technology, new area, and you have to subscribe to that YouTube channel, subscribe to the news there, and see the websites related to that, and you have to be updated also. You have to keep learning so that you be in a position at some point in time to make sensible decisions, right? So this is an investing approach that can be known at this point in the crypto, right? So this is where I have put my small investment, not much, but I plan to increase that eventually. But this seems to be working. I already got around near to 20% of a very small investment that I have put, right? The advantage here is that big investors are there behind this. The process is very simple to get in, get out. UI is good. If above all, the fixed deposit value that you get is very supportive when you're parking the money. So there is a link for you in the YouTube if you want to join that. You can use that if you consider doing that. This is not a financial advisory. This is just a recommendation based on my money that is lying around there. I felt that is fine, so probably you may try. Or there are a number of other exchanges that you can try as well, right? So I hope you benefited a little bit, at least to some bit on how to go about what should be the approach, right? The entire approach can be seen in the slides, the 4 or 5 points that I mentioned. Hope you'll make a note of that. And happy trading, happy investing. If you please share it to your friends and colleagues so that they will benefit. Thanks so much for watching. Bye.